Hello, good afternoon, everybody, and welcome to the day 35 of our 60-day trading challenge. And today was indeed a challenging day, but we were able to, manage the volatility and being able to end the day in a green. It is a good learning per se. P&L again should not be a focus, but whereas today gave an opportunity for a lot of learning, and especially since the market was highly volatile and how we navigated the market could be a good reference point for learning for anybody. So let me just walk you through the trade details for the day. So in the morning, 9:30 itself, we got a trade. We got an indication that our strategy indicated that it could be a bullish day. And as accordingly at 9:30, as you see, we executed a 24,600 put selling. Normally, we prefer to sell the next week's option on a day before the expiry. That is because the premiums won't be sufficient, meaning not very attractive normally. But VIX being on a slightly on a higher side, as you see, VIX level was above 15, and hence the premiums were reasonably good, and we were able to catch a premium of 81.70, 81 rupees 70 paisa. We sold it at 9:30, exactly at 9:30 a.m. as soon as the strategy triggered the bullish trend. And if you look at the option chart, it was in our favor almost till 11:40 or something like that. Like 11:40, as you see here, till then the option premium was decaying. At a certain point of time, it was becoming almost half of the price at which we sold, which was which we would have started with a trailing stop loss, but that did not occur. Then it continued. It started reversing from there. Again, at around 10:55, 11 o'clock, it came almost close to our price where we sold, but again it dropped. And again, as you see, at 11:45, a sharp upside movement happened. And as you know, in the earlier in one instance also this has occurred. So we take the reference of opening range break, that is ORB, of 9:20 to 9:30 time frame. And this was that 9:20 to 9:30. This is the red lines which you see here as a channel. So that is where the we had marked the our reference up, upside and downside. Since we had sold the put, our concern was mainly on the downside. If there is a breach on the ORB breach on the downside, we had to exit the trade. So accordingly, as you see here, 10:45 candle breached the lower limit of the ORB, and hence we had to exit the trade. And we exited the trade, as you see here, at 11:50, almost 11:49 a.m. So based on that ORB breach. And as you see, the quantities which we covered is here is 150. That means sold quantity was 75, and we covered it the 75 quantity, and we also initiated a stop and reverse trade. That means we bought the extra quantity as a stop and reverse process. As see here, that is that decision was based on the VIX was kind of on a upper trajectory, or it was not at least sliding. So it was favorable for an option buying. Otherwise, we would not have probably triggered the stop and reverse trade, and especially the buy trade. And we indeed triggered it, as you see here from the at 11:49 the order entry, and 83.75 is the price at which we entered the long trade. And here our objective was just to cover our trading costs and a marginal profit to end the day in a green. And that accordingly, although the trend seemed continue to be on a favoring on the downside, we exited as soon as with a target set. We exited at 91 rupee 80 paisa. That means we were able to book a profit over here. And as you see here again, it started zooming up. We exited as soon as we could see some profit. And again it dropped, and as you see here, it made a humongous upside later on, but that doesn't matter to us because we exited at this point itself. And as you see here, there are some extra entries. So this is a normal order. This is against the different order which we executed. There also we made a profit, but that is not at all the point of discussion for this particular challenge. Only the first three order, which are MIS orders, or the orders which are relevant for this this particular strategy. So going to the trading log, as you see here, we sold initially at 24,600 put at 81.70, and then we covered it at 83.75. So there was a marginal loss of 212 rupees, including the trading cost of 58.50. So our next trade, which was stop and reverse trade, objective, as I said, was just to cover the trading cost and these loss incurred in the during the first trade. So we went long for the second trade, which when the reversal trade, setup came up. So we again at same 83.75 we purchased it, and then we sold it at 91.80, and we incurred a trading cost of 59 rupee 80 paisa, which means our net profit was 543.95, like almost 544 rupees is the profit. So we were able to manage to close the day in a lighter shade of the green. Again, the P&L is not at all the focus, as I've been saying from the day one. So our focus was, see, how did we handle such a volatile day? As you see here, the day was continuously up and down, and there was in between. As even if you see the premium chart also, it made such a high, and again it coming down, and then and so on. At the end of the day, if we had stayed in the same trade, we would have still made a profit in the first trade itself. But we cannot take chances, is what I'm trying to convey here. So we have to just stick to the rules, and the rules will always help in a positive outcome. So at the end of 35 days, our P&L now stands at a very healthy 14.09%. And as you see the equity curve, it took a dip because of the first trade, and then again it recouped to to a good extent in the second trade. But we still not at the peak level what we experienced earlier. But we are in a the equity curve is an uptrend trajectory. Itself is a something which will give a lot of confidence and psychological advantage as such. So that's all for the day. So thank you for your continued support. See you tomorrow for the day 36 of this 60-day trading challenge. See you. Take care. Bye bye. Have a great evening.